What is up, YouTube? Back again from Dad Investor here. Wanted to go through the buying opportunity that is today in the past couple of weeks, honestly, because you can see here, the market has pullbacks. We make some new highs, and then it comes down, and then it creeps back up. And I have faith in my portfolio, what I'm doing. Everything I'm holding is good quality long term. So even if there are short term dips, this is great. This is the opportunity we need. So I wanted to go over my VIX play. So obviously, I close all my options. Luckily, before SPY crashed, I think it was the biggest crash, or I don't know, I want to call it crash, right? Because it's coming back up. But pullback that SPY has had in a long time, or SPX or S&P 500, whatever you want to call it, the S&P 500. So you can see this, I bought SPY a while ago. You can see like it's compared to when I bought SPY, it's already still up 2%, and but it was negative not too long ago last week, where like if you look at that low price, it's 579. That's really low for the past couple months. So that big drop, this giant red candle right here, that's a huge drop from the 600s, 608, and then all the way down to 585. That's a huge drop in the SP 500, but it has creeped back up to the 600s. So anyway, I probably could have survived and maybe, a week ago or so made some more put spreads underneath SPY. But I didn't. I just, what I did was, I guess there's a dividend coming up, but I don't really own a SPY seriously. Like this is just it was like $5 or whatever when I bought it. I just put a few dollars in so I could always look at it and kind of track it and sort of buy the dips. I haven't really done that because it's not as profitable. I don't want to waste money like that. But what I have done is I bought more MSTY. You can see I have 102 shares now because it dropped, and it's still in red today, and I'm still and I'm positive. My average cost is 30.39. So even though today's return is negative $66, I'm still total return up 21. Because I bought the dips. So it mirrors the S&P 500 just because everything dropped that day on the 18th, and I bought a ton of MSTY. Well, let's actually just look at what I did. So December 18, you can see at this point, this is before that happened, I was buying it at $36.30. And then on the 18th, it dropped to $33. So I bought, I guess I only bought 5 shares there. But so 33, and then it dropped to 31, and I got 10 shares. And then it dropped to 30, and I bought a share. And then it dropped to 28, and I bought 10 shares. And then it dropped to 29, and I bought 9, and then I bought 20. So when it was below $30, I bought the lion's share of my position when it was at $29 and change. So that's how you buy the dip. When it goes down, you buy it. And I didn't buy it all at once. I bought it in pieces. So anyway, this is how you invest in general. I like MSTY. I mean, it's probably not the best long-term strategy, but this is a middle to short-term strategy, really, where I just want to accumulate with the best price possible. I want to accumulate as many shares as I can of MSTY. Now, what I'm doing with the VIX is awesome. So you can see, I know it's negative 9% right now from when I bought it, but that's just because the VIX it had this big jump up, right? And it's relative, right? So it's not a huge jump up, really, but relatively, let me scroll up. So if you see, it was averaging $3.10 or whatever here, and then it popped up, and the high here is $5.01. And then it had a big drop. That's like 3 days. So you got to be able to move on this. So let me show you what I did. So before the 18th, I was buying. So you can see December 11, 6, 4, 2. The dates are all there. I bought 20 shares, I bought 30, 10, 10, 30. And then these 3 days happened. And it popped up to 477, and I sold 50 shares. Almost $5. And I sold 10 again at 478, and then I sold 10 again at 516. Obviously I wish I had sold them all when it was 516, which is higher than what we just saw. Or higher. I think it went up to $5.40. But luckily, it's not like it's a ton of money. So the risk is mitigated. But all my sells are profit. So anyway, this is kind of my VIX strategy. But I didn't want to. And then I bought some more because it dropped back down to $3.11. So I'm sort of I'm collecting my position. I'm recollecting my position. So anyway, the point is, this is kind of my VIX strategy where I just buy the dips, and then when the volatility inevitably spikes, 3-4 times a year, I'm trying to sell a small portion. So essentially, long term, I wasn't really sold on the UVIX. I was thinking, okay, what if I just do some kind of spread or options strategy on the VIX itself? But I don't know. I kind of like this. I think it's good training to buy the dip in general, just as a general investor, personal investor, individual, whatever you want to call it, retail investor. But as the dad investor, I think I should just do that. Like, I should get really good at investing, Warren Buffett style, and just it's really hard to mess it up if you're looking at the VIX, which is based on SPY, or it's based on the S&P 500 or SPX. But you can't buy shares of the SPX. It's an options only instrument. But SPY, you can. So even pays a dividend. So it's sort of like long term, if I had a ton of money, I would just sell puts on SPY. I would own hundreds of shares, sell puts, sell calls, and I would just run the wheel strategy on SPY. And my returns would, I think I estimate my returns to be like at least 40%, if not higher. And then I could, that's just so much money. If you have enough money to run the wheel on SPY, you're basically set where you don't have to work anymore. It's not like I don't want to work. I'm excited. I have a new job offer today. I'm hoping to start my new job in the new year, a couple months from now. But so it's not like I don't want to work. That's not the point. The point is I want to have financial security so I can work in a way that is full of integrity, in a way that is honorable, and not be a slave to the systems that we live in. And my profession is healthcare, so the insurance companies control so much of our life, and they don't know what they're doing. They're not doctors, so I want to be able to, not be their indentured servant. So anyway, things have gone really well, and this is my strategy. It's a buying opportunity.